This is the Precious Metals Briefing with Jerry Williams. Safeguard your money.
Welcome to another edition of the Precious Metals Briefing. I'm Tony Famino here again with Jerry Williams, the founder and vice president of American Precious Metals in Arizona. And today you will discover how your wealth is under attack and how gold and silver investing can protect and even build your wealth. Today we are pleased to have on with us E.B. Tucker. He is the author of Why Gold, Why Now, The War Against Your Wealth, and How to Win It. And Jerry, I'm going to turn it over to you on this, I think, important, and I think it's going to be very helpful to anybody that's listening and interested in gold investing discussion today with EB.
Well, good morning, EB, and thank you for taking time to talk with us.
Thanks for having me, Jerry.
You bet. Tony mentioned the book, which I've read, by the way. It's a very good read. Everyone who's even slightly interested in gold ought to read it. All the facts are there. Obviously, you've been at this for a while. But the catchy subtitle, The War Against Your Wealth, maybe you could kind of define who's making this war. Is it inflation? Is it dollar devaluation? Where is the war coming from?
Well, I'm glad you noticed that, because the subtitle is more important than the title. I mean, gold gold is not really kind of the point of the problem. I mean, gold is the solution, but the issue is what we define as wealth is under attack. And what's complicated, Jerry, is that most people are linear thinkers, right? We bring you up in school to think about things in a straight line. Okay, so you have these things just walk right down this line, 2, 3, 4, 5, 6, 7, 8, and that's the way everything works. And most human beings think this way, and they need to have answers. And you'll see that the political class, the political elite, always deliver things in these terms because this is what people are comfortable with. But in this case, you have to understand philosophy. You have to understand how the world works. This is dynamic thinking. This is different from linear thinking. And a lot of people have a hard time with that. So in the book, what we do is we use the book's kind of written, as you know, in story form. So I tell real, true stories of things that have happened to me and things that I've seen, so that we try to illustrate what this war looks like, what the stakes are, so that people can, by the end of the book, hopefully they're saying, oh, okay, now I get it. Now I get it. Because if you just wait until the consequences arrive, it's too late. I think a lot of people just don't understand the gold market. They don't, I do all these interviews where they ask, what's the gold price going to be this year? Which is a lot of fun, because it's kind of like guessing the weight of a cow or something at the state fair. But it really, when people ask that, I give them an answer to entertain them. But the reality is that they don't understand this market. I mean, right now I'm looking at a Bloomberg, which is an incredibly expensive piece of equipment that shows me live pricing of everything in the world. Okay, so I'm watching this chart you're talking about, where this morning, at 4 a.m. gold was at 1858, and then it fell on a rope down to 1832 or 3, and then straight back up to 1865, and then straight back down to 1855, and then up to 1870. Okay, so why am I telling you this? Well, what's happening is I've been watching this market for decades. What happens is that bullion banks have the ability to use the futures market to play with the price. Okay, there's a lot of money to be made. I mean, gold's a $12 trillion asset class, or everybody talks about Bitcoin to gold, all this. Bitcoin is a very serious asset, right? But it's a different asset. It's not the same thing. Bitcoin is not digital gold. Gold is not physical Bitcoin. Okay, people have to separate these things in their mind. What happens with the gold price is that you see these games played here. It's very lucrative. Once you run out of physical supply, you got to go up to another price level, okay, to draw in people to sell their gold, so you can play with it some more. Does this make sense, what I'm telling you? So what you're talking about is the type of thing you want to watch, because back in March, the dealers that I'm close with on the East Coast, I would talk to these guys, and they were just like, look, for silver, it's $10 over, is what we're selling it for, and we can't get it for 2 months. Okay, well, that's an indication that $12 silver or whatever the low was completely unsustainable. With gold, you were at about 1,500 in March. You're gyrating around a little bit, but the point is that you were pushing people out 4 to 6 weeks. Guess what? We had to step it up a couple $100. That's how the gold market works. So people need to understand that this is a very serious market. I mean, we're not talking about a penny stock. We're talking about 12 trillion, on the way to 13 trillion dollars worth of physical metal, okay? And gold is the only asset in the world that doesn't have counterparty risk. And most people don't know what that means, but it's a very unique tier one asset that the wealthiest of wealthy, the people that really understand wealth, own it. All right. And for the next year or two, this is going to keep happening. We're going to 1850 now. Maybe we go up over 2000, grind it out there for a little bit. People lose some money in the futures market. The same thing happens. Step it up again. That's how this is going to go.
Well, we did have a situation like this in the 70s, which you do refer to in your book. And of course, I was around in those days, too. It was quite a ride until the Volcker and Reagan administration came in and killed the market for us for 20 years. You're saying that buying gold is going to help us win this war.
This is different. This is different from the 70s. There are similarities. There are some things that are happening. I mean, we go into detail about China opening up and why that was a strategic move by American power elite, based on how the chess pieces were set up at the time. It wasn't anything favorable. It's funny because I feel like people, they grow up watching the news and they trust the news. I mean, there was a survey the other day, something like 88% of people believe what they see on the news, even still today. So, and you think about it and you just say to yourself, Pinochet was a villain. Okay, maybe, I don't know, how many people did Pinochet kill? 20,000, 30? I don't want to get the number wrong because people will be very upset, but that's about the number. Mao, okay, killed, the estimate by his own people was 800,000. The realistic estimate in the free world was like 2 million. And you look back at the 70s and it's like, well, Mao, he's a good guy. I mean, we're going to open up this thing with China. This was all about control and all about how to arrange the chess pieces and how to disguise what was happening with the currency. That's what was really going on here. I mean, the average housewife was saying, God, this butter feels expensive. I mean, it's been, I don't remember paying this for it before. We were trying to lower the cost of living to disguise the erosion of wealth. But now we're in a situation where we're turning the United States into a carcass. And what's happening is that people that are prepared are standing by on the sidelines, ready to picket that carcass like a car that goes into a chop shop. And every piece of it is picked away from the car. And before you know it, you're standing there saying, what happened? I barely even have a piece of metal left here. This used to be a car. Okay, it's too late. It's finished. That's it. So this is a different scenario. I mean, we're talking now about structural changes that if you see them coming, you can profit from them. Now we're not just trying to make money. I mean, we're not a bunch of capitalist savages where we're just trying to make profits and beat our chest. It's not like that. What we're trying to do is to survive. That's the deal. I mean, your job as a human being, as a person, is to sustain life. And if you've been working your whole life and going towards these goals that, as far as you're concerned, have been worthy of all your effort. I mean, I say in the beginning of the book, if you got $1,000, that's wealth. I mean, why are you going to work? You're going to work so that you can somehow get a better life. You can save and invest, and eventually you don't have to go to work anymore. And then you can use your time to, throw catch with your grandson or something. I mean, this is why people work. So if you're doing that, you got to wake up. You got to pay attention, because otherwise you're going to be standing there saying, "What happened? I used to have a Honda Accord, and now I just have there's an axle left."
Well, that's why we never get an audit by the GSA or anybody else as to how much gold we really have in reserves. And we probably never will until, I don't know what it's going to take. But, 1974, we did sort of sort of a cursory glance at what was in the gold. They opened the door and said, "Yeah, there's a stack of them. We got 18 more doors. We don't have time to show them all to you right now." But one thing we do know, EB, is that China has more gold than anybody, and they're very clever about disclosing how much they have. We know that they're net buyers, and they're also the world's largest producer. So I didn't see that in the book, but you mentioned opening China. Do you have any idea or guess as to how much gold they might have?
Well, I know this, Jerry. I went to Cambodia to see the first commercial gold mine in Cambodia. This has been about, I don't know, 7 years ago or something like that. And the guys that were running this thing, they had a royalty on the mine, and there was a Chinese company, a private Chinese company that they had contracted with to actually do the mining. So they were going to do most of the mining, and there was an Indian fellow that had gone to Yale. He actually owned the operation. And so we watched these Chinese, about 30 of them. They hit the ground. They arrived on the flight from China. They didn't take any time to check into a room or anything like that. They went directly to the project and began working. I've never seen anything like it. It was the closest thing to zooming in on an anthill and watching what the ants do. And the guys were telling me that what happens is part of the way China builds its gold reserves is by doing these types of projects and being very involved in actual production, mine production, and then the gold comes back to China, and then it's absorbed in, part of that annual increase, which is very difficult to see. But here's the thing: I don't think it matters. It really does not matter, because what people need to understand is the way your wealth is being stolen is partly through negative interest rates. And people say, well, the rates aren't negative, they're 80 basis points. Okay, you have to understand something. The Fed is disguising inflation. So the Fed says we want 2% inflation. They actually will take 4% inflation and call it 2% inflation, right? And then they'll say, well, we were at 0% inflation for so long that we have to run a little hot right now to make up for it. And so what's happening is that you've got savings at 50, 80 basis points, and you're paying tax on the interest, and the real inflation rate's 4%. So technically you're going backwards by 3.25%. Now that doesn't sound so bad, Jerry, because 3.25%, that's not that much. I mean, we can afford to go backwards. Yeah, well, 30 years from now you have zero. So because that's how, 3% for 30 years is nothing left. So the game that's being played right now is, let's keep interest rates low. Let's keep people thinking that they've got to borrow as much as they can and buy a house and buy a car and do all these things and take a trip and whatever they can do to spend the money, which stimulates the economy, okay, keeps the wheels moving so that people can service more debt. Companies can borrow more and turn more debt over, okay? So as this is happening, the U.S. Yellen will issue a 50-year treasury, okay? So people will, companies and life insurance companies and pension funds will buy a 50-year treasury at, call it 3%, and they'll think that's a bargain because they'll say, well, where else are you going to get 3%, all right? And this will run until there's a crack up, and then they'll do yield curve control. So they'll say, well, we're going to have to control yields. So a 10-year can only be 1.25, and a 30-year can only be 2.5, and a 50-year can only be 3. Everybody happy? Yeah, we're good for a little while. Do you see how this is going to go? So my point is that people should not be like, well, how much gold does Russia have? A lot. Okay, how much gold does China have? A lot. They won't even let you leave with an ounce. What does that tell you? Okay, so and they're going to get more. So, but how much gold do you have? That's the question. And you don't have to answer. People don't need to answer that question. In fact, if someone asks you how much gold do you have, tell them that you would never answer a question like that because it's inappropriate and frankly embarrassing for someone to ask that. Okay, so ask yourself, what do I have? Don't worry about the Chinese, because it's not a war against Chinese wealth. I mean, those guys are winning. What people in the U.S. need to say is how much gold do I have? The answer is zero. I mean, take a survey at a dinner party. No one has any gold, but they want you to tell them how to buy Bitcoin. It tells you something, right?
Excuse me. Let me ask you this though. Since we're talking that obviously the way to win a war is to have gold, but as a professional, I used to be asked all the time, what percentage should I have of my net worth? And I used to say, 10, 15%. Well, obviously I have a lot more than that, but what would you say would be a reasonable amount? I often jokingly say, whatever helps you sleep nights, that's what you should
Yeah.
have. But do you have any
Yeah.
kind of a
Well,
guideline
those
on
are,
how much gold a person should have?
I do. We have a chapter about this in the book, and we give a formula. And as I used to be an asset manager, we had a precious metal equity fund, and we got asked this all the time. And all your answers that you gave, by the way, are perfectly fine. But I always tell people it's a lot less than you think. Okay, so I look at numbers around 2 or 3%. And the reason is, in this chapter, I explain to people that gold is not an investment. I mean, of course, if you went to a bankruptcy court, it would be considered, something like an investment. But gold is not something you buy to make money per se. Okay, now a gold royalty company, right, like Metallo Royalty, where I'm a director, it was up 128% last year when gold was up 25%. That's an investment. Okay, so gold is an asset. It's money. It's wealth. It's unencumbered wealth. It's wealth that doesn't have any sort of, nothing needs to happen for gold to maintain its value. That's very, very unique. And so when people start looking at their balance sheet, I explain to them that the way to do it is make a little pie chart and say, well, what do I have? If I start looking at, and I have 90% S&P 500 and 10% home equity, it's zero gold. I mean, I would say that's like a little crazy. I mean, so you start looking at what piece of the pie do I want unadulterated wealth to have? And when people look at it with that lens, some people will say 20, some people will say 10. I say a bit lower because I'm in my 40s. I'm working. I'm involved as a director on Metallo Royalty and Nova Royalty. I'm very into those businesses, and I'm at a place where I need a certain amount of, I call it fire insurance, but I don't need too much fire insurance because I'm covered. Okay, so people, once they see it that way, then they can make a decision. Then they can come to you and they can say, okay, I've decided I need X dollars worth of gold. What do you recommend? And see, because everybody does it backwards. They say, boy, gold's going to go up. I better get some. And they have no idea what to get or how much of it, or they're flying blind.
Well, they want some guidance, and of course, I always recommend it as insurance. And insurance against what? Well, insurance against collapse of your currency, for one thing, or depreciation of it, which is about the most sensible thing that I can say, and that's what I do. So, what percentage do you want?
You can sell gold, Jerry, if there's bullets flying over your head and the neighbor's house is on fire. Someone will buy that gold. I mean, in the worst possible scenario you can imagine. And so you're right. That's the thing, that when nothing else can catch a bid, gold could catch a bid. And people say, well, what good is that? Well, it's not worth a lot until you need it. So, I mean,
well, let me ask you, if I can ask you something else along these same lines, though. A lot of people say, particularly older people, and your grandfather was one in the book, where they had to turn in their gold. And there are some people out there that say, well, they'll just, if it goes up high enough, the government will just grab it from you again and make it illegal. What do you think the odds are of that happening?
Pretty good. I think probably the way that probably happens at much higher prices, however, and I would think that the way that happens nowadays is probably an excise tax or some sort of restriction on your ability to monetize the gold through sale. Now, again, this is just a prediction. I mean, I don't, we'll have time will tell. Right now, gold is not popular. So it's not something that needs to be confiscated because nobody wants it to begin with. I mean, Jerry, you swim in a pretty small stream, and I think you probably know this. I mean, you go out into a dinner of 20 people that you loosely know, you're not your closest friends, and you ask them who here has any gold. Nobody. I mean, so it's not something that needs to be confiscated because people don't want it anyway. So that's got to change first, Jerry. That changes. It becomes popular. People buy it. It goes up in price. Other assets struggle. Okay, so there's shakeout with other assets, and people. Remember this stock boom that we're having right now. This probably keeps going for a while. Okay, and a while might mean a month, and it might mean a year, and it might mean 2 years. I don't know, but most of the stock booms, when they end, 99% of the people have less money than they started with. Because
Right.
what they do is they continue trading and trading and trading and trading. They generate a huge tax bill. And then finally there's a wipeout and they're left holding nothing. So we have a lot of steps to go on this journey. And gold has to become sought after. And then when it's a place where people are stuffing their fiat currency to get out of government paper, then it becomes something that the people that make the laws are upset about.
You mentioned in your book about cryptocurrencies, and particularly you used the word Fed coin. I have people ask me about that once in a while. Is that going to be a new cash substitute? Because we obviously know there is a war on cash.
Yeah, that's right. That's right. Okay, so you used to have a $5,000 bill and all these other very large bills, and that was back when $5,000 was, that was like a really respectable annual salary. So now $100, I mean, you can in New York City, I mean, you can barely go out for breakfast for two with $100. I mean, it doesn't get you very far. So already the natural devaluation has rendered cash pretty much useless. I mean, the other thing is if you have a big wad of cash, people will say, well, what are you up to? Why do you have so much cash? Are you a terrorist? I mean, so cash is already finished. I mean, it's not really very. We're about to have the Super Bowl in Florida, by the way, and I was reading in the paper that it's a cashless Super Bowl experience where if you are blockheaded and only have cash, then you can put it into a machine and it'll spit out a Visa card for you. I thought that was pretty funny. So anyway, so cash is done. Well, what FedCoin is it's going to be the result of the Bitcoin speculative mania. So I explain, I give a theory of where I think Bitcoin came from in the book, which I won't bore people with here, but I'm pretty confident that I'm right about this. And the private markets, the speculative markets, have done a fantastic job of developing cryptocurrency as an asset, and it's technologically kind of a lot farther down the road than it was 10 years ago. And so the government doesn't need to buy your Bitcoin to initiate a digital wallet for every person with a social security number. They don't need to do that. They can just create their own closed loop system. There's no need for a decentralized ledger. As you know, Jerry, we could make Jerry Coin, and we could just make that and have servers, producing and managing the coins, and proof of that is all these celebrities and porn stars and people were coming out with initial coin offerings a couple of years ago, and it became obvious that it didn't really take a whole lot to create a coin. Okay, so the fact that there's thousands of coins and everything, it's just, you have to realize that at the end of the day, sovereign governments are not going to give up the right to control the money in their society. I mean, period. There's not going to be a private money movement. Okay, you're dreaming if you think that's the case. So I theorize that there'll be FedCoin. I've had people that are connected to powers that be tell me that they're very excited about this, and that the governments are very aware that they could control and track every single currency unit in existence. They could shut people's wallet off. They can say that you can't buy any firearms because you made some comments, anti-government comments on your Facebook. So we have restricted your FedCoin wallet. You can only buy entertainment and groceries. So, I mean, this is all possible. It's all possible. And think about it. It's a dream come true, because no more counterfeiting, no more tax evasion. So total control of entitlements. I mean, you want to control the outcome of an election, you give people $1,000 that they can spend on whatever. Does that sound familiar? I mean, people just, this universal basic income is happening now. I mean, all this stuff's happening, right? It's all happening in a sequence that we laid out in the book, and everybody keeps looking at the latest news item and saying, well, okay, I guess that's just one thing. I mean, it's the equivalent of going outside and people are telling you there's a hurricane coming for weeks. You say, well, that's just one gust of wind. I mean, okay, so it's a little dark in the sky, but I mean, you're a Cassandra. You're making a bigger deal out of this, and that's what's happening right now. It's actually amusing to watch because it takes people forever to figure out that they're screwed.
It sounds reasonable if you're in sort of a closed society, but what about worldwide? I mean, we're basically calling the tune worldwide on buying oil. You have to have dollars for the reserve currency. All these other countries have our currency as reserves. It's going to be difficult, I would think, to get the entire world to go along with a scheme like this.
Well, I mean, to a degree, but the value of the dollar is the fact that the U.S. has a dozen nuclear-powered carrier groups armed with warheads, pointed at you, and they say you're going to take the dollar. Okay, I guess we'll take it. So, I mean, how long can the U.S., hold on to that? Probably for a little while. I mean, it takes a while to screw that one up. But they take the dollar not because it's great; it's because they're told to. So how long can the U.S. run around with a big stick, waving it at people, telling them what to do? That's the real question. I mean, a little while, but you're turning the country, into scrap metal, and you can't have it both ways. But Jerry, people get worked up about this stuff, and then they think that it's going to happen by April. And you got to understand that this stuff takes a long time. It takes time. At the end, it happens very quickly, like almost instantly. Okay, that's people always tell you, slowly, and then instantly. So you have to be aware of that. But the reality is that these erosions. I mean, all this stuff was happening 20 years ago. I mean, after 9/11, the wheels were in motion. I mean, the 90s was when all the hollowing out of the country began. It was all happening in the 90s. Well, if you sat around and said, I'm not gonna do anything productive. I'm not gonna invest money and do all this stuff, and be involved in business because I know this place is screwed. I mean, that was 25 years ago. You have your opinions about how things are screwed up, and you keep those opinions separate from your ability to make the best decision moment to moment that you can. Okay, that's the successful people separate what they wish was happening from what is happening. There's negative interest rates. There's an erosion of my wealth. It's very difficult to be in business. The cost of labor is rising dramatically. The economy is not really growing. It's only growing because they're eroding the money and flooding it with 0% money and trying to get me to borrow. What does my asset pie look like? Okay. And if the answer is no gold and a bunch of overpriced assets, you're probably out of balance. And so the book is designed to say to people, hey, there's a problem, right? You've been asking me about it for weeks. There's a problem. Something's not right. Let's take the time to figure out what that problem is so that you can set yourself up for safety and take advantage of what's happening right here, right now.
Well, we talked to Jim Rickards a couple of weeks ago, and he's very pro-gold, as you probably know. And he's predicting, and he has been consistent on this for several years now, that eventually this gold's going to go for $10,000. It might be as soon as 3 or 4 years out due to the runaway inflation, which brings me up to one of my last questions is, how do you know when it's the right time to sell? And if it does get to 10,000 and you do sell and you get $10,000, what are those dollars going to be worth?
All right.
That's a difficult.
Jerry, this is a good one because this is a very easy answer to this. And when you sell the gold or when you sell any asset is when someone is willing to pay you an amount of money that, first of all, seems a little bit kind of crazy, like you wouldn't buy for that price. And secondly, this is the most important piece of it, is that you can take that money and you can do something else with it that you really want to do. For instance, if it's 1979 and someone paid $400 for gold that you paid $125 for, okay? Now 400, remember, it ran to 800, but let's say it's, because that $800 run happened at the very end, as you know. So let's say that it's 400, it's 1979, and you said, man, this is 3 times what I paid for it. Okay, fine, I'll sell it. Now, how much real estate or how much S&P 500 or Dow Jones could you have bought at that time? A lot. Okay. So my point is that if gold is cheap compared to inflated assets right now. Okay. If that makes sense, gold is inexpensive compared to other things like real estate and stocks, which have been bid up tremendously. If the tables turn and gold starts to look expensive compared to other assets, like you say, man, I could sell 10 ounces of gold and buy like a duplex. I mean, this is pretty crazy, right? Like debt free, I mean, that starts to look like, okay, well, that's also a real asset. You know what I mean? It's different, but that's a lot of real estate. I mean, a couple of years ago, 10 ounces of gold, was 18 grand and the duplex was 200, and now the tables have turned. Okay. So the way that I monitor that is, and in the book, I have When Do You Sell as a chapter. The way I monitor that is I make a chart of how many ounces of gold would it take to buy the S&P 500, and you can do it vice versa, whatever. But what you're doing is you're saying, how much stock could I buy with an ounce of gold? The same is true on the other side. How much gold could I buy with a share of the S&P 500? And this allows you to see relative value. And there's going to come a point in time where the value of that gold is so superior to other assets that you want. I mean, I like real estate, right? Like not all types of real estate. Okay, I'm not talking about like a big palatial home, but when I can buy a rental house, that generates cash and at a price where I could see rents go down 30%, I still make money. I'm pretty interested in that. Like I like to own that. I mean, there's a lot of things I could do with it. I could smash the house and build another one someday. I could live in the house. I could rent it to someone. I could give it to a friend or a family in need to live in. I could do a lot of stuff with it. So my point is that when you look at when to sell, it's not just about a price. Like to your point, $10,000, like Rickard says, and then what do you do with those $10,000? Well, you don't know. But if you look around and you say, I get $10,000 and I can get, this is what it was in the 70s when the Dow was 1,000. Like the Dow had been 1,000 for a decade. And as in 1982, it took off and it ran, from 1,000 to 30,000 over 40 years, of course. But my point is that stocks were dirt cheap. Rental real estate was dirt cheap. New York City was covered in needles and people were burning down their own buildings for the insurance money. Okay, that's what the bottom of a market looks like. I mean, the gold market just looked like that in 2015 and 16. It was pitiful. I mean, there were guys 60 years old, been in the business their whole life with their face in their hands. That's how bad the gold market was. So these markets go in cycles. And what happens is at the top is that you forget that you're in a market that goes in cycles. And then at the bottom, you forget that as well. So a lot of people, they sell at the top, they sell at the bottom and they buy at the top because emotionally your mind tries to play tricks on you. But don't do that. Read the chapter of my book, When to Sell. I show you the tools that I use personally. And when you do that, it helps you see what's happening instead of operate off emotion and fear, which is not a good recipe.
Normally, I guess this is as good a time as any, wrap up these conversations with a quote from the Wizard of Id. I don't know if you're familiar with him or not, but
no.
Well, anyway, his philosophy is mine too. Whoever has the gold makes the rules.
You've been listening to the Precious Metals Briefing with Jerry Williams. To learn more about safeguarding your money, go to apmaz.com or call 800-522-GOLD.